What if the whole world was watching gold news and inflation reports, but the real action was happening quietly behind locked vault doors that you never get to see? As we enter 2026, something important is starting to come out that could change how money, power, and control really work. Central banks, the same groups that decide interest rates, currencies, and whole economies, may have been quietly collecting a valuable metal that most investors were told didn't matter. Not gold, not oil, not digital money, silver, and not just a little bit. What you're about to hear isn't a guess, it's a pattern. A pattern hidden in trade records, factory needs, military buying, and mysterious storage movements across many countries. January 3rd, 2026. May not be remembered in history books, but make no mistake, this is when the curtain starts to open. Because if silver is being moved to the center of world money systems, then currencies, markets, and your buying power are standing on much weaker ground than anyone admits. Stay with me, because by the end of this video, you may never look at money the same way again. The vault's beneath the headlines. On the outside, the world money system looks open and honest. Interest rate choices are announced on time. Inflation numbers come out every month. Gold supplies are reported, checked, and talked about on television shows and business meetings. But real power has never been on the outside. It lives in places without windows, behind steel doors, measured in tons, not inches, in vaults the public never sees and is never supposed to question. As of January 3rd, 2026, something amazing is becoming impossible to miss. While the world has been taught to watch gold, another metal has been quietly disappearing from open markets, vanishing into government-controlled storage, important stockpiles, and hidden holdings that rarely make news. That metal is silver. For most of modern history, silver was deliberately pushed down in public thinking. It was relabeled as too unpredictable, mostly for factories, no longer used as money. Financial news repeated the message. School textbooks backed it up. Central bank reports barely talked about it. And yet, behind closed doors, the actions told a very different story. Over the past 10 years, strange mysteries began showing up. Ongoing physical shortages, even though prices stayed quiet. Long-term buying contracts locked in far above current prices. Government-connected groups buying up supply without telling anyone. Important reserves relabeled under non-money categories. None of this happens by accident. Central banks do not collect things without a plan. Every ounce bought shows a calculation about future risk and future control. To understand why silver matters now, you must first understand why it was pushed into the shadows. Historically, silver was money, not just symbolically, but actually. It moved among regular people, while gold stayed with rich leaders. Silver was everyday power, daily power, people power, and that made it dangerous. When modern paper money systems were built, silver had to be stopped. Gold could be locked up, put away, and controlled. Silver, however, moved too easily. It touched factories, workers, trade, and energy. So, it was slowly removed, not made illegal, but redefined. By the late 20th century, silver was no longer discussed as a money foundation. It became just another material. That change allowed something important to happen. It allowed collecting without anyone watching because no one checks factory metals the way they check money reserves. And this is where the real change begins. Silver is not just rare, it is impossible to replace. Unlike gold, nearly every ounce of silver ever mined is used up, lost in electronics, built into buildings, spread across technologies that cannot work without it. This creates a puzzle. Silver is necessary, limited, and disappearing, yet priced as if there were plenty. Central banks see this puzzle clearly. In a world speeding toward electric power, artificial intelligence, military computers, and renewable energy control, silver becomes something far more powerful than protection against inflation. It becomes a choke point. Control silver, and you influence energy changes, defense readiness, technology independence, factory continuation. Now think about the timing. World supply chains are breaking apart. Penalties are rewriting trade rules. Strategic independence has replaced globalization as the main idea. Money is no longer just currency. It is leverage. It is access. It is denial. And silver sits at the meeting point of all three. This explains the silence, because if markets fully understood that silver is being moved not as a material but as an important reserve, price discovery would break overnight. So instead, collecting happens quietly through middlemen, through government-linked factory demand, through reserves labeled in ways that avoid attention. This is not a theory. It is a pattern. And patterns don't lie. They reveal plans. Why silver now? The unspoken reasons. Central banks don't act randomly. They don't chase headlines. They act carefully, often years, even decades ahead of the public. So the question we must ask is simple. Why silver, and why now? The answer begins with a truth few admit. Trust in paper currencies is falling apart faster than governments can respond. Debt levels are sky high. Central banks are trapped between rising interest rates and politically weak economies. World trade is breaking up. Penalties have turned money itself into a weapon. And everywhere, Citizens are losing faith in how stable their own currency is. Gold alone cannot fix this. Gold is heavy, unchanging, excellent as a long-term reserve, but limited in its ability to influence new technology and important buildings. Silver, however, is both a store of value and a working tool. It is a form of factory power that no other material can copy at large scale. Think about this. Solar grids need silver to capture sunlight. Defense electronics need silver to work with accuracy. Medical and AI systems need silver to stay reliable. Satellites, batteries, and 5G networks all require silver's special properties. Control silver, and you control the backbone of the modern economy. Now add world politics on top. As nations prepare for supply chain independence, resource shortage becomes a war tool. Central banks are no longer just protectors of money, they are resource planners. Silver allows them to protect against energy shortages that could stop factory output, technology blocks that could halt innovation, currency loss that could erase savings overnight, supply chain wars that could disrupt world business. And it's not just about collecting, it's about timing. Why 2026? Because the conditions are coming together. After pandemic recovery stress, energy change, speeding up demand for important metals, rising world tensions in Asia, Europe, and the Middle East, advanced economies teetering on money instability, all of this creates a perfect storm. Central banks know that the first mover in silver holds not just a money advantage, but factory, technology, and world politics leverage. This is why the world hasn't been watching silver prices closely. They are watching the wrong metal. And history shows that when collecting happens in silence, the discovery hits markets like a tsunami. Prices can jump, currencies can shake, markets can panic. Yet, for those who understand the plan, this is a once-in-a-generation opportunity. By hoarding silver quietly, central banks are preparing for situations that few even imagine. A world where money itself becomes a tool of planning leverage, nations competing for factory survival, not just financial control. A shift in world power structures long before regular markets notice. In short, silver is no longer just a material, it is a weapon of strategy, market meltdown, or once-in-a-generation opportunity. What happens when the world finally realizes that central banks have been quietly hoarding silver for years? The answer is simple. Chaos followed by opportunity. Let's start with chaos. Markets are like nature systems. They react violently when a basic shift happens. Stocks tied to traditional things may suddenly fall. Investors who ignored factory metals may find their portfolios weak. Currencies connected to unstable reserves could shake. And materials dependent on silver may see sudden spikes, sending ripple effects through everything from electronics to food supply chains. Imagine this. A central bank announces, even indirectly, that it controls a massive silver reserve enough to influence world pricing. Suddenly, investment funds scramble to adjust positions. Regular investors rush into physical silver, driving demand further. Factory sectors face supply bottlenecks. Emerging market currencies that depend on imports of silver-linked goods see inflation shocks. This isn't made up. Markets respond faster than governments can react. And in moments like this, fear builds on fear. But for those who understand the plan, this is also a once-in-a-generation opportunity. Silver AS double nature as both a money and factory metal means that smart investors gain exposure not just to price increases, but to real-world economic influence. Think about these sectors. Energy. Solar and battery technology depend heavily on silver. Defense, military electronics require silver for accuracy and reliability. Technology, AI, computer chips, and 5G devices are silver dependent. Those who position themselves early are not just guessing, they are aligning with the buildings of the future. Now think about the timing. World debt crisis make paper currencies weak. World tensions make supply chains shaky. Advanced economies are racing to electrify, digitize, and militarize. Silver sits at the meeting point of all three forces, but there's a warning. Timing is everything. If markets overreact too quickly, silver could spike temporarily, then crash once central banks adjust. If markets underreact, the first mover, usually central banks, secures control of future supply, leaving others scrambling. Either way, the discovery of central banks' silver hoards is not just a money story. It is an economic earthquake, with sectors, currencies, and governments all forced to adjust in real time. Currency crisis and the shadow of a silver standard. Imagine waking up one morning to find that the money you've trusted for decades, the currency in your wallet, the deposits in your bank account, the values shown on stock tickers, no longer shows the reality you believed it did. This is not science fiction. This is the possible result of central banks' hidden silver hoards and their quiet plan unfolding in plain sight. For centuries, currencies have relied on trust. Trust in groups, trust in central banks, trust in governments. Paper money has value because everyone agrees it does. But what happens when the trust holding up these systems is shaken? Central banks collecting massive silver reserves introduces a silent but deep threat. The possibility that silver may become once again a cornerstone of money stability, not a replacement of all paper systems, at least not right away, but a shadow silver standard, a system where part of currency value is secretly backed by silver reserves, giving some nations an unbeatable advantage over others. Let's break down what this could mean. Paper currencies on shaky ground. Every paper currency, dollar, euro, yen, pound, is only as strong as its central bank's believed ability to keep value. But if the market sees that silver is being hoarded carefully, trust in currencies without matching precious metal backing begins to shake. Investors and governments start asking, is my currency secure, or am I being left exposed? While others control real reserves, inflation spikes, and loss risks. Central banks may use silver reserves to support home stability while quietly undermining others. Countries with weak factory buildings or limited access to silver could see their currency values drop. Inflation would speed up as imported goods become expensive and home prices for necessary resources spike. Trade disruptions and economic imbalance. Nations that control silver reserves can use this power to influence trade agreements. Imagine a country refusing to sell silver-based parts for solar panels or electronics to another nation until certain money deals are made. Suddenly, money isn't just currency. It is negotiating power in factory terms. The shadow silver standard emerges. Here's the unsettling possibility. Rather than a complete return to a formal silver-backed money system, central banks could put in place a partial silver standard where silver supports select important things, materials, and building projects. The system could work quietly, invisible to the public at first, yet powerful enough to shift world economic power from paper-reliant nations to those controlling the metal. World financial realignment. Nations without access to silver may find themselves systematically weaker, forced to borrow, lose value, or negotiate bad trade terms. Debt-heavy economies could see currency crisis, while silver-rich nations bring together influence over world production and pricing. The ripple effect on everyday life. This isn't just abstract theory. A silver-backed plan could impact regular citizens within months. Imported goods spike in price. Utility and energy costs rise as silver shortages affect buildings. Stock portfolios tied to paper currencies see unexpected ups and downs. Inflation-adjusted wages fall behind rising costs. Psychological impact on world markets. Markets are as much about perception as reality. The discovery or even suspicion of massive central bank silver holdings can trigger panic buying, guessing trading, and money flight. Suddenly, investors are not just buying silver. They are buying insurance against a system they no longer trust. And this feedback loop can make the crisis bigger, creating ups and downs far beyond any natural market cycle. Currency wars intensify. As silver becomes an important reserve rather than a material, nations may take part in currency tricks, blocks, and aggressive protecting plans. Countries with limited silver access may attempt to lower their own currencies to stay competitive, while silver-rich nations gain leverage without firing a single shot. A glimpse at historical parallels. History offers lessons. The last major currency changes, such as the end of the gold standard or post-war repayments, were chaotic, sudden, and devastating for unprepared nations. Silver, with its double role as both factory and money thing, has the potential to create a disruption of similar size. The silent architects of power. Few will notice until it's too late. Central banks and top financial groups are not announcing plans or holding press meetings. Every move is calculated, every ounce of silver measured against future world leverage. Those outside this circle, governments, investors, citizens, are left reacting rather than acting. This is the shadow the world may soon live under. Currencies losing independence, markets reacting to invisible metal flows, and power coming together silently in vaults no one can access. And yet, as dramatic as this sounds, there's a silver lining. For those who understand the signals, who act carefully, and who can position themselves in alignment with these unfolding changes. Because as the curtain begins to lift, the question isn't just who controls money, it's who controls the resources that give money real power. This creates a puzzle. Public markets go up and down wildly. Regular investors panic or guess blindly. Only insiders hold the map of the real game. The elite, meanwhile, bring together wealth, influence, and planning advantage without firing a shot. 3. Rewriting the rules of world economics. Historically, elites have used gold to define wealth. But gold is unchanging. It is symbolic. It is heavy and hard to move. Silver, however, works at a working meeting point of currency and factory power. By controlling silver, top groups can influence currency stability in ways paper money alone cannot. Shape trade agreements secretly by controlling resource flows, redirect technology progress according to planning priorities, ensure that some nations remain dependent while others bring together control. This is not guessing, it is pattern recognition. Historical collection trends, factory contracts, world political moves all point toward a focused, long-term plan. 4. The post-shock world. Imagine a world where this plan fully unfolds. Countries with limited silver access struggle to keep factory output. Currencies of weaker nations lose believability, sparking inflation and people unrest. Planning sectors, energy, defense, communications, are controlled by those with silver leverage. World economic rankings are redefined with the silver-rich nations and groups holding the keys to survival and success. For the average citizen, the meanings are huge. Everyday costs rise as factories dependent on silver face shortage. Technology access becomes layered. National debt crises worsen as weak currencies struggle to compete against silver-backed influence. And all of this unfolds quietly in shadows. Few will see the ways it works until the results are unavoidable. 5. Strategic advantage in a fragmented world. In 2026, world political landscapes are not uniform. Trade blocs break, alliances shift, and nations compete fiercely for important resources. Silver provides both shield and sword. Shield, protect home economies from currency shocks and factory shortages. Sword, put pressure on foreign nations without regular warfare. By combining silver hoards with planning deployment, elites position themselves to control world affairs while keeping believable deniability. This is the heart of modern financial warfare. Secret control over real things, not just paper currency or guessing investments. 6. The human element. At the center of this plan is not simply metals or markets. It is people and power. Elites understand that real influence comes from predictable human behavior. Panic drives markets. Shortage drives obedience. Perception drives policy. By controlling the flow of silver and the story around it, they manipulate these behaviors, reshaping economies and societies quietly but decisively. 7. Opportunity for the informed. For those outside the elite, there is still a window of opportunity, but it is short. Awareness is power. Understanding patterns of collection, factory use, and world political plan allows informed investors and nations to align with the path rather than fight it. Planning positioning in silver-linked things, technology sectors, and factory supply chains could offer protection and potential growth, even as broader markets face trouble. Timing is critical. The early mover benefits most. Waiting leaves one week to the next wave of realignment. 8. The final reality check. The hoarding of silver by central banks is more than financial maneuvering. It is a redefinition of power, a preemptive restructuring of world influence, and a reminder that control over resources is control over life itself.